Hello, everyone. Welcome to our Ravenpack Control of Data podcast. I'm Grinis, a senior data scientist here at Ravenpack, and today I'm joined by Jon Neitzell, founder and managing partner at Anduril Partners, and we'll be discussing the opportunities and challenges of integrating big old data into investment processes. Hello, Jon. Welcome. As a start, could you please give our listeners a bit of background about yourself and what you do at Anduril Partners?
Absolutely. And thank you so much for the opportunity to be here. So I've spent about 20 years, a little over 20 years now in financial services, first on the sell side as a research analyst, and then on the buy side, most recently as a portfolio manager, and then chief data officer within the asset management division at Goldman. During that time, was always trying to figure out how to do more with less, and was struggling with covering a lot of sectors within technology, and yet having to do my job in a very linear way. Only so many hours in the day, only so much time I could cover reading and conference calls and fly around the country for research. And I began to look for ways that I could kind of harness opportunities within technology to drive insight. And I reached out to the private equity group and started to ask them, what new and emerging technologies could really make a difference in, the roles that I'm in. And they began to bring me into meetings, with some of the early fintech companies that were trying to answer, some of these challenges. Ended up becoming a board advisor for a number of those companies, using those efforts in my process. Saw very good outcomes in the way that was helping to drive my decision making, and was ultimately asked to become the first chief data officer within the asset management group. Since that time, have kind of felt like this opportunity to really bring data into the process of making decisions is a very large opportunity across multiple verticals. And so I ended up leaving the firm and starting my own company, Anduril, and have taken a number of the board seats that I had at that time and added a number of others, and now work across a number of portfolio companies, both investing and advising on how to match use cases and needs in decision-making across both financial services and the corporate world to emerging technologies in a way that drives solutions.
Perfect. Thank you so much. Yes, prior to joining Ravenpack, I was also at Goldman, actually also at GSAM, but in London. And I do remember you were in fundamental equity. I was first in global portfolio solutions, then investment strategy group. And I do remember some of the forums you were doing and always super exciting stuff on the data front. So why don't we start with the positive side, because we said we are going to discuss both opportunities and challenges. So let's start with the opportunities. So based on your over 20 years of experience now in the fintech space, how would you summarize the key opportunities that the integration of big and alternative data presents for professionals in the finance industry?
I think it's really exciting, and I really believe that harnessing data analytics and what that means for decision processes is on the same level as what we saw from public cloud, and the same way that started within kind of the technology focus segment, and then broadened to impact every single vertical across the globe. I think is happening within analytics. And one of the particular opportunities that financial professionals have is they have a very clear kind of attach of data and watching theses change and understanding, the way to monetize that in terms of asset prices. And yet it's a significant challenge because of the amount of data available. And so the importance of having process, understanding where to plug these inputs into becomes incredibly important. And I remember early in my journey, standing in the office and looking out over the Hudson River and realizing that the Hudson, was full of water, which is a tremendous resource, but it was completely unusable for me, unrelevant to me because it wasn't prepared and it wasn't focused in a way that I could consume it. It needed to go through a desalination plant, to, a recycler, a filter, be bottled or brought, into a drinking fountain in order for me to actually apply it to something that was relevant to me. And I think that's one of the biggest both opportunities, tremendous resource available, clear monetization strategy, but also one of the tremendous challenges because it really requires process to make that applicable.
Cool. Yeah, I'm personally also a huge big data fan. I came into the space actually during my PhD. So I had the opportunity to work with online vacancy postings for the UK. And I remember being so fascinated by two things. First, I was especially interested in the textual information of the job posting. So first, the process of turning this raw text into something that's numerical that you can actually use in models, as you were saying. And this is if you think about it, it's an extremely hard problem because you kind of, as a human, you understand how to do it on 1-2 cases, but then when you want to do it at scale, you have to teach the machine to do it, and it's extremely hard. But then once you've managed to solve this hard problem and you start getting these insights, it's incredible how much more subtle and interesting things you can do with this type of data relative to more standard data. And maybe talking a bit more about news, because that's what's NLP is the core of what we do at Ravenpack. And in terms of news, just to give a concrete example, you can start measuring things that you can't measure with standard data. For instance, reflation currently is a very good example. Reflation is not equivalent to inflation. It's the expectation of inflation as we have monetary fiscal stimulus, kickstarting growth. And so markets expecting this inflation. The standard ways that people use, say, measuring reflation by looking at break-evens or using inflation survey-based expectations are all imperfect proxies, because, for instance, for break-evens, these are derived from fixed income securities, which can also be influenced by other supply and demand factors that are not related to the inflation expectations themselves. Whereas the survey-based expectations are a bit more slow-moving. Whereas in the news, it kind of gives you a new alternative approach. You can go and create a theme about reflation and directly gauge the amount of concerns in the market commentary about this specific topic. So this kind of like opens you a new avenue. And even to take this even further, for instance, something that markets, that people are really concerned about now is like, how do you measure asset class sensitivity to these themes? And there is a lot of talk about Bitcoin taking the place of gold as an inflation and reflation hedge. And suppose you wanted to use some historical data for that. Well, if you look at dimensions of gold and Bitcoin with reflation narrative, then if you go to the past episode about Trump reflation trade in the 2016-17, that was mainly about gold. But if you look at the news now, it's actually Bitcoin is taking a bigger and bigger share of this type of news. So I think it kind of offers you new avenues of looking at interesting topics and measuring them in really new ways. So definitely, I'm someone who is very passionate. And this brings me to the next topic that I think would be great to discuss with you, because we have so much different data. Like we have news, we have credit card transactions, labor, job postings, etc. How would you, what would you recommend to investors in this space to decide which data matters and what they should be starting with?
Sure, it's a great question. I think the challenge really goes back to process. Where in your process are you going to plug in the incremental data point or the incremental data feed? One of the big challenges that I've had as a portfolio manager is you're getting literally 1,000 emails a day, all with bits of truth, all with, some, prism or some component of a mosaic that you're trying to populate. But the challenge is that the noise begins to overwhelm the process. And there's actually a great kind of humorous story about this that was told by a couple of the Nobel Prize winners in behavioral economics. And they did this test at one point where they brought in several professional gamblers and they gave them 5 pieces of information, and there was something like 5 horses. And so they wanted to see, what is the value of giving information to professionals, and how does that influence their ability to predict or make, good choices. So sure enough, they run the first round of horses, and the, professionals had done better than would be expected by chance. And then they gave them 10 pieces of data on the next round, and they did this so on for 4 or 5 rounds, each time having more data available. And you would think that the predictive capability would continue to climb as they had more data available, but in fact it flatlined because their ability to consume and digest that data was limited. However, their confidence continued to rise, with the amount of data that they had available, which, is a very sobering kind of reminder for us that even though we are surrounded by data and soaked in data, that just simply having it available doesn't actually help us to make better decisions. There's a point at which there's significant diminishing returns, and that can actually crowd out our ability to kind of tease out value or insight, from these inputs. So I think it's so important to first start with process. Where are you going to plug what, data component or what perspective into the discussion, and how will that drive a change in your decision process? And that's where I think technology and software can really help, because if we're able to, map out our workflow and say, these are the components, whether they're qualitative, meeting with management teams, or industry contacts, or whether they're quantitative sets that are coming in with, billions of rows, revealing some, tendency. If that's plugged into a consistent process with feedback loops, then that starts to really guide us in terms of where our incremental investment or incremental opportunity is. And this has been long true for the quants, but increasingly true for, fundamental users as well, on both the asset management and corporate worlds. But documenting kind of that path, what, set of assumptions we expect to drive what decision, is incredibly enlightening. And it allows the entire group or team to come together and start to say, here's our views, see them laid out. Is this, in fact, what we believe in, drive the discussion towards key performance indicators. And then it's not so personal. You're proving or disproving a hypothesis, versus it being, kind of a personal discussion. I don't know if that helps. It's a very broad topic, but that's, kind of the initial, perspective I would add. And then I can walk through a couple of use cases if that would be helpful.
Sure. I think that would be super interesting. I would just add to this. I think from my perspective, what I see is that institutions are often quite scared of really focusing on just one data set because of the dynamic nature of emerging important topics. So today you have Brexit, tomorrow you have COVID,
Right.
and so you really you think about, okay, I'm gonna spend a lot of money and resources on, say, incorporating a job postings data set and starting to build a team around using it, and it's extremely hard. And then I don't manage to extract that much info from it, or say I focus on credit card transactions, or labor mobility. So it's really, I think, from the data set perspective, it feels to me that, for instance, something like news is super broad in the sense that it covers all different topics. For instance, in Ravenpack, we have topics related to economy, society, politics, companies, and we track over 300,000 entities. And with the next release, which is going to happen later this year, we are going to go to more than 7 million entities and to 13 languages. So it's kind of opens up a huge horizon, and you can build any type of themes and topics and track anything. So I think this is something that's super important for investors to keep in mind, who really don't have that many resources to kind of on board and be able to become a bit of an expert in one specific data set to try to focus on something that is broader so that they can be part of this dynamic nature. And the other thing that I personally find from perspective is that we always need to be able to back test. And this is where when you put these constraints on the coverage, on the amount of historical data that you have, you end up with not that many data set maybe that you really want to look at. Because, for instance, Ravenpack data goes back to 2000, but a lot of, say, if you look at mobility data, they just started actually with COVID. There was a big jump in tracking mobility, which was not there before. If you look at credit card transactions, these type of things, even online job postings, this is something that a lot of starts typically in 2009, 2010 for the earliest, but with backtesting, you often want to go back and say at least have the Great Recession episode. So it's really, I think the parameters for me in terms of selecting the right data set is what exactly you want to focus on. If you're really want to focus on the labor market, then maybe go for the online job postings. But if you want something that is broader and you want to be able to backtest and not have any look ahead bias, etc., I think you might want to go for something more universal. But would be very interested to hear some of your own case studies.
Yes. So I'll kind of frame that in a couple of ways. One is, I think you did a great job of summarizing the flexibility of the Ravenpack platform. And I think that's really important because of the changing nature of the question. There are some, needs that you might have that you can hook, essentially an index of built, kind of pre-built. I want to know when there is information about some type of a, natural disaster impacting a supply chain. That's something that, could be built and kind of run in line. And it's essentially just creating curbs around areas of sensitivity for, a portfolio or subject matter that would be influenced by, some exogenous, impact. Then there's also, ongoing kind of thematic questions that tend to pop up. What's the sensitivity of, certain companies or assets, to rising, treasury yields or to inflation or, to some change in tax policy. We started discussing the other day something like reinfection rates around, the coronavirus post-vaccine are, a rising question. And that's a significant, it's a single question that has significant ramifications for global markets. And so that's not something that we would have anticipated necessarily, a year ago or even, kind of 6 months ago. It wasn't a pronounced question because everyone was focused on, either social distancing to get rid of the pandemic, or that there was the hope of a vaccine and that was kind of an end state. But as thought has developed and as the numbers have started to come in, it turns out we have new risk, on the horizon, which is reinfection and how effective are the vaccines. And so that requires, flexibility in a platform to be able to, tune models to that, new and emerging risk. So I think that's a great, kind of example around how, platforms like Ravenpack can both address an ongoing, consistent, set of maintenance questions and episodic, kind of flash, important topics. Three other, areas that I thought might be of interest or applicable, showing kind of different uses of data, was at one point we had a significant question around rising energy prices. And we didn't know, kind of the direction, what was really driving that, if it was a supply demand issue. Then energy prices fell off a cliff and there was, almost no bottom. Some of the forward prices were actually negative. And the entire firm was concerned because if this was signaling lack of economic demand, then we had to redo all of our models, and it was, prepare for recession and so on. But if this was actually a supply issue, then, that was actually good. It was cheaper energy for the economy. And so we were able to build a statistical engine and look, at and map all publicly traded asset prices going back 20 years and look at them on a sigma move basis. And that allowed us to take a large issue in the market and boil it down to a statistical question of, are these assets being hit, within a significant, statistically significant range, or is it simply, a volatile asset moving, in a wild way? That allowed us to then stack rank all of the portfolio positions, which had been chosen on a fundamental basis, but then quickly look at that on a statistical basis and, combine the tools of those two worlds. A more kind of natural language processing type use case would be something like building an index of web search terms and using that to align with how people are making purchasing decisions. You can actually model out how far in advance people will begin to search for purchases on different topics. And I worked with one of the chief researchers at Google to create one of these indices. And we were able to predict things like Intuit and other software providers that were difficult to count units, but those purchase intents began months before a decision, and we were able to predict companies in their kind of future success. And then one final example is press releases and conference calls, looking at the success of the management commentary on that call can be a great signal. And I had a situation once where Cisco was going through a software transition. They've been primarily hardware, they're moving to software. When that happens, they tend to bill much more of that purchase to the future, or they put it on the balance sheet and charge a subscription, which reduces upfront revenue. When that happens, it looks like the company is actually going into a really difficult period because we can't see the success of that business in upfront pricing. But looking at the conference calls and the press releases, management commentary was very positive and growing because they saw the confidence in their customers and in their business, even though we couldn't see it in the financial statements. And Cisco is a very, broadly well-covered company. That was one of the inputs, along with our work on kind of, the impact on the financial model and when that would flow through and how that would show up, that gave us the confidence to make that a large position, while much of Wall Street was quite negative on the lack of upfront revenue. So a couple examples of ways that technology can be used to really define and then, a problem and then prove or disprove the hypothesis.
That's super interesting. Thanks a lot for these examples. Very, very interesting case studies. And you're right in terms of reinfection rates, or even COVID itself. Last year, when COVID hit our planet, we didn't have a COVID event among our event taxonomy, but because our systems are built such that we also have a keyword search functionality, and you can, without even coding, you can create your own little topic by combining different words together or saying the system to ignore certain words. In news article, where we were able to kind of create the COVID topic and create panic indexes around that. And in less than 2 weeks, we were able to build a COVID monitor. And with reinfection rates, we can do the same by trying a combination of different keywords that target a specific theme. You are able to create, and this goes to the other topic I want to also touch upon, which is the importance of being able to leverage big data, whether you are a quant or a fundamental investor, whether you know how to code or not to code, whether you are a systematic or a discretionary investor, because At Ravenpack, one of the key values of our firm is big data democratization. It means like we really want anyone to be able to use and leverage big data to make better decisions. And this is why, of course, our data is a lot leveraged by quants. And the way it works is that you would have an API and you load the data and you can manipulate it in lots of different ways, etc. But as a more fundamental and discretionary investor, you can also use our platform and build yourself some monitors really quickly by exploring different events in our taxonomy or creating your own theme that you want to track and play around. And as you say, it's very important to have this loop where you try something and it doesn't work, and then you go and you try again, and you are able to change things dynamically. And I remember reading a terrific piece you recently wrote where you summarize a lot of the challenges, and you also talk about the importance of business knowledge as being one of the key points for successfully unlocking big data. And it kind of is a very interesting question, because very often the people with the most business knowledge don't get to directly interact with big data just because they are the most senior people. And so they wouldn't go and directly design an indicator. They would really maybe outsource this to more junior people. So I wanted to get your perspective on how much value you think we're losing from not being able, by getting the big data closer in some sense to these people with more business acumen, or for firms that not like Ravenpack don't have this type of platforms built out where they could go and directly experiment themselves and create themselves a monitor that they can use, just like a Bloomberg monitor, basically. What these firms could do to really improve on that.
It's a great question, and it's a huge issue as people try to start to tap into the power and the capability of things like the Ravenpack platform and the ability to use natural language processing to start sorting signal from noise. I would say that I've seen teams really wrestle with this because often it's a translation issue. And I watch the fundamental analysts try to work with the engineers and the data scientists, and they would say, well, bring us essentially the silver bullets. We expect you to go out there and do whatever magic it is you do, and just bring me, a pile of, decisions that I can put in, trade, and then I can go home early and, go play some golf. And the data scientists were like, okay, well, what is your question? What hypothesis are you trying to prove or disprove? And what are the key performance indicators that I should use, to test that? And the fundamental world would look at them and basically say, what are you talking about? Like, I just need stocks that are going to go up or stocks that are going to go down, and can I just, I just need the list of names where I should put the trades in. And so it was really interesting to start to unpack the importance of starting to think and operate like a team. And one of the things that I think was really helpful was doing things like, the forum events that you discussed, where you bring in, some of these leaders from industry and simply have conversations primarily around use cases. This was the burning question. These are the resources we applied against that. This is how we turned your questions or your desires about what success or failure would look like into quantified key performance indicators, whether it's same store sales or whether it's number of subscribers or number of units. Then that's something that that the data world can start to apply quantified measures against, and we can begin to kind of test or and process whether or not our hypothesis is performing as expected. And that tight coupling across teams and that translation, I think, is going to get more and more important, because even if you go and look at, I want to get a data engineer or a data scientist to come in and do all this data stuff so I can make better decisions, the disciplines required in those specific areas are getting deeper and more sophisticated as we go. And it's driving the need for low to no code tools because you want those business users to be able to ask their questions in a creative and iterative way. That's where a lot of the discovery is, things like, is there an issue with reinfection? Well, how fast can I test that? If I have to go commission my data team, to go and then build all of these engines and then test that, like it could be weeks or months before I actually get, something back that I can use. You and I the other day, on the phone, were able to go into the platform and point and click our way through, a number of different, models, search terms, ways to filter, things. And I think that's so powerful, because then business users are able to start, tightening that cycle of, do I have a legitimate hypothesis or idea? How fast can I test it? And kind of move forward where the harder, more interesting questions are, instead of getting hung up, at these ground stages.
Yeah, I totally agree. I think perhaps even there are a lot of questions that are not being asked just because of this issue that if, say, you are a portfolio manager and you have a topic that you know that is going to drive the market maybe over the next 1-2 weeks, then you're not going to call your data scientist and say, okay, go and try to do this, because maybe that will take a month for the data scientist to find the way around. You really need very dynamic tools and things that you can manipulate quickly to test out whether your hypothesis is right, and you are probably the person with the most knowledge of how to exactly define it. And so yeah, I think it's extremely important to build out these platforms. In addition to, I also have to say that even as a quant, when I joined, I felt a bit blessed, because you have basically all these machines sorted out for you. And as a quant researcher, you can just focus on the applications. You can just use your API and load the data and start playing and looking how you can build different narratives, how you can link that to the market. Whereas if you had to really go and solve all this issue for yourself, and not talking about the processing millions of news articles yourself, that's really impossible. But it's really, I think, yes, the way forward is probably between collaboration between data analytics companies and the finance industry, because there is all this huge part of the job that has to be done, and that a lot of finance institutions cannot do in-house. So they have to really learn and work with the data providers. I mean, I really enjoyed these fascinating conversations. I feel we could go on forever, but I'm mindful of your time, Jon. Thank you so much for joining us on the podcast today, and I hope our listeners enjoyed it as well. And please do join us next time to learn about other exciting alternative data topics.
Thank you so much for the chance to be here. And I guess in closing, I would add just one thing. The emerging topic of ESG obviously is a very high priority topic, or rising priority. And that's one of the areas I think NLP is particularly well suited, because the nature of the question and how it's defined is constantly evolving. And this is one of the categories where I think, this type of engine can be really helpful real time. In terms of following up, a number of the articles that I've written and have been involved in will be available as a link in the document and podcast going out, and would welcome further discussion with the community.
Perfect. Thanks so much, Jon.
Cheers.